What's up, everybody? Welcome to another trading analytics video. I'm Trade Runner, and man, we had an eventful week in the market last week, spearheaded by NVIDIA's earnings last Wednesday. But before we get into that, if you guys haven't already, like, comment, subscribe to the channel if you enjoy this type of content. It really does help us out as a channel. Also, if you guys haven't already, check out our Discord server. The link to that is in the description of this video, as well as in our channel bio. We absolutely crushed it last week, and we're looking to have an amazing start to September, close out Q3, and get Q4 rocketed off to an amazing start as well. So let's get into some of the content here. NVIDIA's earnings on Wednesday was the most anticipated event in the market the last few weeks, right? We had Jackson Hole earlier in the month, and finally we closed it out by having NVIDIA's ER last week. And as I mentioned in our previous video, anything aside from an absolute gangbusters type of report was going to likely lead to some pullback in the market because of the high expectations placed on the ticker. So NVIDIA, as you guys are probably well aware, it beat on earnings, beat on EPS, and it beat on had a higher guidance, right? Those things for a normal company are very, very positive, and you should see a nice boom in the share price due to that. However, NVIDIA is not a normal company. It's been the market leader for the last year and a half. And anything that wasn't, hey guys, we're up 15, 20% in revenue was going to lead to something like this. As I said again in my previous video, I said that I'm expecting to be more of a meh type of ER report, specifically because a company can't 10x every single earnings. That's just not feasible, right? Because if NVIDIA 10x again this year, we'd be looking at a $30 trillion market cap, which is worth more than the next 11 companies combined. And those companies include names like Microsoft, Google, Amazon, and Meta. So keep that in mind for perspective purposes, right? Now, NVIDIA again had a muted ER response, and as you can see, it actually sent us below the 122.50 zone that has been very, very critical for that ticker for the last few weeks, right? We had a couple of retests to see if we were able to break it, but rejected from that here, as you can see here on the 4-hour chart. But the most interesting pattern forming on NVIDIA is actually here. Because we got 2 consecutive daily candle closes below that 122.50 zone, it leads me to believe that this double top is now going to be validated, and we're going to see some short-term downside to about the 112, 111.75 zone. Now, what does that mean? Do I think the market's going to completely tank? Not necessarily. As you guys are probably well aware as well, the month of September is historically the worst performing month for the stock market across the board, as many institutional investors and market makers are tax loss harvesting to kind of mitigate their tax bill for the 2024 tax year, right? Now, what I expect to happen, again, not necessarily guaranteed, but I expect to happen is that we're going to see some sort of a pullback on NVIDIA as the market cools down. And we're going to test that 111.75 zone as the next key area of support, because if that fails, the next stronger level of support is 106. Now, I'm not a NVIDIA bear by any means. I just do think that the market is in need of a desperate pullback after running hot for as long as it has. And we're actually running into some interesting seasonality as well, with the likely Santa Claus rally heading into close of Q4, as well as the election cycle, which is kind of throwing a wrench into some of our plans, because this is, for lack of a better term, the first time we had a regular election cycle, because 2020 we had the COVID debacle, the COVID scenario, of course. So that being said, I do think that we'll see some pullback prior to a bounce in the market to close out the year, and NVIDIA is one of those leading factors, right? So I think a cooldown is necessary. It also is kind of indicative of the chip sector needing a cooldown as well. And when you see names such as SMCI losing 60% of its market value in 3.5 months, right? Going from $1,200 per share to a low of $390 per share the other day, right? We had a huge correction on that ticker. And that kind of scared a lot of people off of the chips as well. But we have names such as Intel, which, you know, has been downbeaten for so long, actually getting some positive news with a strong candle close above 2150, which for me was the bullish signal that I was looking for as we broke this double bottom neckline. And it's likely to me that we're going to look to close this gap at $29 in the coming months. Now, with Intel being a smaller cap chip name, I'm not expecting that to happen in 2 weeks, right? But I do believe that with the the way the chart is set up and the way the company has been kind of making its moves, Intel is one of the more bullish tickers to kind of pile in on heading into the end of the year. So we'll see how that goes. I do like the fact that we held 2150 on the daily chart, and it looks to me that we could test $25 relatively soon. And finally, the last name I want to kind of talk about here today is Dollar General. So if you look at this chart, it's actually pretty similar to the Intel chart I just showed you. I have a terrible earnings, massive gap down to close that. I mean, to open that up. And now we're just kind of seeing some consolidation. What I want to see before I look to go bull on Dollar General is seeing that this $82 price zone holds. I don't want to see anything below this just yet. I want to see that this holds and is able to consolidate and build us a nice little base on the $82 to $83 range, which would lead me to believe that we can see some upside to retest the $92 price point. And then eventually a close above this would look to close this gap here at 123. Now the company is in some interesting financial straits, not necessarily that it's underperforming. It's more so that they're trying to grow too fast and they don't have the liquidity and capital to support their growth expectation, which is a good problem to have, but keep that in mind. I do think that at some point Dollar General is going to catch its footing and regain a lot of that drop that we saw post ER. Because a $40 drop, which is 33% of the company's value at the time, is not typical for a quote unquote stronger company. So that's what I got for you guys today. A little bit of a weekend update heading into this Labor Day weekend. I've been Trade Runner. This is Trading Analytics. Feel free to check out our Discord. Link to that is in the description of this video, as well as in our channel bio. Like, comment, and subscribe to the channel if you guys haven't already. And we'll see you guys in the next one. Have a happy holidays and happy Labor Day holiday. And we'll see you guys soon.